Oh my goodness. You just found yourself at a Weenie Trades game plan video. And today's video is brought to you by Mustache Greg. Yes, Mustache Greg. Why am I having a mustache? In this video, I'm going to be breaking down major market indices. I'm going to be breaking down SPY, the Qs, VIX, IWM, and then I'm going to be going into some member ticker breakdowns. So let's get right in the video. First up we got is SPY over here, and SPY having a little bit of a down day, a little bit of a gap down. We're in a bear market. Be sure to watch all those YouTube videos where I'm talking about how to profit in a bear market. It's definitely a little bit different than a regular bull market. And so today, SPY's down about 1.2%. Right now, into the end of the week, we have about a $10 expected move. That means we could see SPY at about 402 on the upside from here. Of course, there's still about 50 minutes left in the market today. And we could see SPY down as low as 382. The thing is, though, is if we're getting that close to the lows of about 380, we might do a liquidation break and start to creep on a little bit lower. So SPY, yeah, kind of just neutral at the midpoint of the range. It'll be definitely interesting to see where we break out to the upside or down to the downside based off today. A little bit of a bullish candle today as the long lower shadow, the long lower wick indicates a little bit of buying pressure today. If the S&P-Y does rally, I would expect it to be short-lived, and I expect quite a bit of resistance at about this 405 area. So I do have butterflies set up short-term up to the 405, 406 resistance, but I have longer-term negative deltas, meaning I have longer-term short positions that make money. But in case there's a short-term rally, I have a cost-efficient way of making money. Be sure to watch that How to Profit in a Bear Market YouTube video. So that's SPY. Let's check out IWM. IWM reached that 170 target that we've been talking about. Now, actually a little bit of relative strength, although it is still down on the day. There are stocks like GameStop and AMC in the IWM, so that's going to start to drag it down. We've already satisfied pre-COVID highs. We might dig a little bit lower into this consolidation zone of about 150. So if I had to give just one price target on IWM, it'd be about that 150 level. Enough said about IWM. Similar to the SPY, could get a kickback rally, but if the IWM's coming into resistance of about 187 short term and starts to reject, there could be another reload short on the IWM. Let's check out the VIX, the Volatility and Fear Index. People were asking me that up day that SPY had yesterday, hey, why is the VIX still up or not selling off as much as it should be? Well, the VIX is not always directly inversely correlated to the SPY. The VIX is a measure of volatility in option prices. So the volatility of option prices are still pretty high. We still have wide ranges in the market, and there's a little bit of a divergence. The VIX was not really selling off yesterday while SPY was green. That hinted a little bit towards the gap down and selling off today. So moving forward, how am I going to analyze the VIX? I'm only going to be interested in the VIX if it's really starting to break out. And I have alert. If VIX starts to get over 35, I've got my ears perked out. I've got my my eyes peeled. I'm ready for a potential VIX breakout. And VIX could get as high as like 50, maybe even as high as 60. And that would start to begin to hint towards a selling climax in the market. So keeping an eye on the VIX. That's all I have to say about that. Let's check out the Qs. Qs, relatively weak, down a little bit more than the S&Ps. And it's probably that interest rate environment just really weighing down on the Qs. Qs unable to break the high of the day today, while look at the SPY. SPY was able to make a higher high on the day. So, yeah, Qs still relatively weak. The Qs have things like Google in it, and Google's getting smacked today. Google still looking for a lower dip buy on Google, 1826. Post earnings, I was like, I'm out, Google. I'm out, you know. That was just a little bit of a blow off top, as they say. Also a bearish candlestick after Google's earnings that hinted that Google is going to get some selling coming into it. And I love Google stock, but the thing is that in a bear market, I love a lot lower prices. So I'm just being very picky with my formerly loved investments, and I'll be trading Google more after its stock split, which is apparently on July 15th. So the liquidity tightens up, becomes much easier to trade Google and get in and get out once that stock split occurs. So that's Google. And Facebook's getting clapped as well, gapping down. I wouldn't be surprised if Facebook comes underneath those lows. And you should actually subscribe to Backpack Trader because Romulus made a video talking about, hey, Facebook wouldn't be surprised to see it at or near those lows within a few weeks or months. Where is it over here? Here, YouTube stocks? No. Go ahead and subscribe to Backpack Trader. Romulus is a great mentor. He mentors me and teaches me about different things in the market. But look over here. Facebook face plant. Here we go. Facebook face plant. Warning us 3 weeks ago when Facebook was much higher after its earnings report that was going to be lower. So Facebook coming down, and look at that. Snapchat getting absolutely murdered today. Down 43% on earnings. Wouldn't be surprised to see Snapchat get clapped even further, probably sideways to slightly lower. Wouldn't be surprised to see Snapchat a single-digit stock in the future. So Snapchat sideways to slightly lower. If it does rally, 30 is going to be some resistance. I don't know if it can get up to 30. 24 is going to be some resistance. And even short term, 20.57 is going to be some resistance on Snapchat as well. So, you know, the Qs are down. Tech stocks are down. Even the meme stocks are down. GME down quite a bit today, down 8.79%. New lows in the day. Took a short on GME at about 91.50 this morning. Added liquidity, meaning I'm throwing out a limit order to take profits. Could have done a little bit better. I got out at about 90. GameStop now going down just quite a bit further. And all I can do with these meme stocks is just warn about them. This is what I was talking about just last week. We were having a discussion on meme stocks, and it's like, is it right to say or to short them and say that they're going to go down? And it's like, well, I'm a technical analyst, and most likely they're going to keep on dropping. AMC down 10.6%. Now, I closed my short on Friday at about 1170, so maybe I should have held that a little bit longer, but I am still holding on to my GME shorts, and it's selling calls, selling bear call credit spreads, and those actually make money as GameStop goes sideways to slightly lower. If GameStop tanks, all it does is it pays me just a little bit faster. So I've got some layered GameStop shorts and other stuff like that. So that's the overall ETF analysis. So now I want to get into some member ticker breakdowns. And if you're not a member, what you doing? It's very cost efficient to become a member of Weenie Trades Live. We ask you, hey, what do you want? What stocks do you want broken down? You get to see cute pictures of Peter outside in his little vest. And I also give trade setups. So for example, a trade setup top short candidate was Upstart, UPST. Down 13.5%. And we're telling them about that before it drops when the stock is sitting at $50 a share. So since then, Upstart's down 30%. Put options paid just a little bit, you know. Put options did pretty well when a stock drops 30%. Either way, subscribe as a member if you want those trade ideas. I'm not really going to tell you what to buy or what to sell. I'm just showing you what I'm looking at and what I'm potentially considering trading. But let's get into some member ticker breakdowns. First up, we got XLF. And this is the financial sector ETF. And financials, actually a little bit of relative strength today. So there could be a little bit more of a rally that if the S&P starts to really climb higher, the XLF financials could climb higher. But even still, why even worry about that? So as you can see, we just printed a doji candle now. See, look, oh, now we're starting to flip a little bit green on the daily as the market's still open. But I wouldn't expect the XLF for financials really to get anything going. I mean, I'd be very surprised if it got above 35.60. So that could be a level to potentially sell calls against on the XLF. Give as much time as possible. You actually get more premium if you give yourself more time on selling those calls. But I wouldn't be surprised to see if XLF touches like 34.50, maybe as high as 34.70, this gap over here. And gaps, they don't always have to fill. They just tend to be magnets and good reference points. That's how I like to use gaps. And maybe XLF gets as high as 35, but yeah, what I would expect if it were to do that, and again, this is just a prediction. This isn't a fact. This is just, at this point in time, this is what looks best to me. A rally, potentially some resistance, and then thunk into a sell-off. Maybe not straight to a lower low. Maybe it sells off, puts in a lower high, lower low, maybe a little bear flag, and then a drop. So to negate that downtrend, XLF really needs to get like an inverse head and shoulders going, and then start making higher highs and higher lows. But sometimes bear markets can last quite a lot longer than you might think. So that's my analysis on XLF. Next up we got is Costco, and Costco reports earnings. And Costco got decimated. And actually Costco was one of losing trades that I had. And it was just one of those things where it's defined risk where I went long on Costco right at about 501. And I was looking for just about 515. And we just consolidated the whole week. So pretty lame way to lose on a trade. I just lost on the premium. It didn't really lose based off Costco dropping against me. But anyways, I was just thinking about that. But hey, glad I was out right up there instead of holding on to shares and then getting absolutely murdered after target earnings. So Costco over here, up slightly on the day. Let's check the expected move. They do report earnings on May 26th. So Thursday, super exciting. $37 is the expected move. And I bet that expected move expanded a little bit since its recent sell-off. So Costco, edge of the expected move. I like to look at the edge of the probability of touching. Right at about 460 on the upside. Notice how that's a little bit lower than the edge of the expected move. Edge of the expected move says, maybe 470. But look, the premiums are still pretty high on some of these call options. So if I were to play Costco earnings, you could do an upside weighted butterfly. The thing is though, look, the spreads are still decently wide. You don't want to be doing too complicated of option strategies when the bid-ask spreads are wide. It's generally best to just stick with single calls or single puts, or at most a debit spread when trading earnings when the bid-ask spreads on the option themselves are wide. So, and look, you get some opportunities to do $2.5 wide spreads. Yeah, based on Costco, based off recent volatility, I'd expect it stays inside the expected move. The real money is probably going to be made trading Costco after earnings. However, based off this daily chart, this looks like it could be a little bit of a U-shaped formation, and maybe we do start to squeeze just a little bit higher. 460 is the breakdown candle high resistance, so I wouldn't expect it to really get much higher than 460. If it can get above and hold the 460 though, for whatever reason, 480 would be that next area of resistance. I would not expect Costco to get above 490 and certainly not above 500. So those could potentially be calls to sell on Costco. So let's say you're bullish on Costco for its earnings report. Maybe you could do something. I would try to go as close to the money as you can because look, 460 is already some resistance. And so you don't want to be buying calls in front of resistance. That's the trickier part. You want to be buying calls that are closer to the money so that you can be taking profits into resistance. Does that make a little bit of sense? Comment down below. But basically what I'm saying is Costco's not expected to go much higher than 500. They would have to surprise and beat very well, and there'd have to be a massive positive reaction to the Costco earnings report. On the downside, if you got some Costco shares or want to hedge, maybe there's another Grim Reaper. You could buy the 400 put, sell the 397.50, max loss of you'd probably get filled at about $50. You make about $200 if Costco sells underneath that 397.50. That seems like one of the better risk to rewards just because so many things have been getting destroyed after earnings. Could be some sort of Grim Reaper type of move. But either way, yeah, if you're going to do a butterfly, you can do buy, butterfly, and that's buy one, sell two, buy one. Buy one, maybe sell two of the 480s, 450 by 480, and then maybe something like 510 to protect. Okay, that's a little bit more reasonable. $30 wide, equal weighted butterfly, max risk of 530, and a max profit of 2,469 if Costco closes the week right at that 480. So a potential butterfly, but still that's a lot of premium that you could potentially lose. I wouldn't even want to risk $500 on Costco. I would wait to trade Costco after its earnings report. So those are my quick thoughts on Costco. Next up we got is Tesla, TSLA, and Tesla, boy, getting absolutely destroyed, down 7.43% after already getting pretty hammered. And I was thinking about this rally. Look at how overextended this rally was. This 55, 60% rally. Look at this. From the peak, 46% drop. And that drop probably hurts a lot more than those that were enjoying the rally. Tesla, not looking too good. I wouldn't be surprised if Tesla, over the next coming weeks and or months, eclipses this 570 support level. And I kept on getting a lot of pushback on live streams like, hey, Weenie, Tesla's going to 800. Tesla's going back to 900 in no time. I'm like, it can, but if it did, it'd be a short. It's more likely to drop. And so far, Tesla has been dropping. So the best I can do is warn based off the highest probability, based off technical analysis. And what I like to look at where Tesla might be headed is former clusters. And look at this former cluster right over here, 395 up to about 450. I think that could be potentially an area where Tesla might be a dip buy, but that's just a previous area of value that buyers said, yep, we're going to consolidate here and break out, former breakout area. That's really the best reason to go long Tesla there. Otherwise, you might be able to get Tesla for quite a bit lower prices. Sometimes stocks get a little bit overheated and overcooked, and a short squeeze occurs for a very long period of time, and people buy the stock because it's been going up a lot. And then there's a rationalization that they're buying it, not because it's going up a lot, but because they love the stock and love the company, which may also be true, but don't let that be the main reason or the rationalization when really you were just buying a stock that kept on going higher. So Tesla, still short on Tesla. Here's my positions on Tesla. I've been taking a lot of profits on Tesla shorts. I'm waiting for a bounce to re-short. But basically, this is a sell the 800 call and buy the 820 call to protect. So I collected $825 credit up front. And I get that maximum $825 if Tesla, by the expiration date, November 18th, is just underneath $800 a share. It can be at $799 and I still get my max profit. It can be at 800.00 and I still get my max profit. If the stock price finishes at 800.01, I might have to close this out for $1 and then I made an $824 profit. So as you can see, selling credit spreads a much higher probability of getting your maximum profit because you're selling options, and the longer that the stock price stays away from that 800, the more this premium seeps away. And so I still have $502 remaining as the trade right now is up $323. Not too shabby. I also have an aggressive debit spread that was out of the money, but then it became in the money. So now, as long as Tesla is underneath 680 by December, so a little bit more time, $510 turns into $1,000. So this one's about a 1-to-1 risk to reward. However, the stock price is underneath that 680. And since it's underneath that level, I just need to wait. So as long as Tesla's underneath that level, cool. And these are ways you can profit in a bear market. It doesn't really matter the direction of the market to me. And I'm just going to keep on withdrawing from the Robinhood portfolio until it stops performing so well. But as long as those short positions keep on making money, so am I. So those are my thoughts on Tesla. Be careful with the longs. It's been relatively weak for quite a while. Notice how S&P had made that higher high on the day. I don't think the S&P is at its lower low on the day yet. But look, SPY's towards its highs and Tesla's towards its lows. You do not want to be seeing that if you're looking to be long a stock. So those are my thoughts on Tesla. Let's check out Apple. And the question from Apple, from Diesel asked, hey, what's a good investment entry for Apple? And people were telling me, hey, Weenie, why are you so bearish on Apple? And that there was when Apple's at 173. I was like, Apple, I wouldn't be surprised to see it back at 135. Well, here's Apple. 135 actually potentially was a dip buy. I said I was going to buy some shares at Apple or I'll reevaluate. I didn't get a chance to buy some shares. I do think I might be able to get a lower low on Apple, as most things are more likely to retrace over time. And if not, if I don't hit the exact bottom, that's fine. There will be tools that I can use to catch the bottom or to identify if a rally is going to be sustaining or continuing. High volume, convergence of a lot of different indicators, confirmation between many different sectors, different sentiment analysis, all that good stuff. But I wouldn't be surprised to see Apple. I have this alert down here at about 82.52, and this is just pre-COVID highs. I think that would be a good area to start building an investment. And again, the way I like to invest is dollar cost averaging. If I end dollar cost averaging generally at good deals. It could be considered a good deal depending on your time horizon, but it's difficult exactly to say when you can buy a lot more shares at cheaper prices, like a whole lot more shares at cheaper prices. And that's where the real margin of profit is built. there's not a lot of margin of profit still on Apple at this point in time. And even then, the question becomes, can it really grow as a company from there? Yes or no? So Apple, not my favorite stock, not the worst stock in the world. Balance sheet looks pretty good, pays a good dividend. Apple will likely survive this massive correction, this bear market. However, define survive to me. I don't know. Comment below what you define as surviving as. But down there, this is my buy zone for Apple. Just going to kind of wait. And if not, if it turns around, I'm not going to have FOMO. Maybe I buy Apple and I really love it all of a sudden at 160. Oh, that's fine. I'll wait. I can be nice and patient. Until then, I'm just going to keep using that cash to pay high gas prices, high grocery bills, and living expenses. Next up we have is AMD. Similar thing, AMD. I'm kind of looking at this like 57 to 60 consolidation zone. So that would be just a little bit, one more lower low. So lower highs and lower lows, still in this kind of channel down. One could argue it could be a bullish wedge pattern, but it still needs time to develop, even if it is a bullish wedge pattern, but more so just a downtrend channel. I'm looking at AMD around that 60 level to see where it checks out. And Romulus has been talking about stocks like this, AMD, Apple, all these good stuff, all these good companies. Go check out Backpack Trader. Romulus is telling you what's going to happen before it happens. And AMD, yeah, just looking for that 57 to 48 zone. AMD is a great day trading stock. Again, AMD will likely survive this bear market, but it'll have some scratches and some bruises on it. And our last stock today is DLTR. DLTR, this is Dollar Tree. Dollar Tree, if we look at the daily time frame, kind of a little bit of a cluster. This is actually a pretty easy one. If you love Dollar Tree right now, you can buy it right here and put your stop loss just beneath that low, assuming that it doesn't gap underneath your stop. It does have earnings, however, Dollar Tree, on the 26th. So same as Costco, before market. Options chain expected move on DLTR is about $17.84. And based off the ranges that I've seen the stock do, that seems about fair. Unless it gets grim reapered, Dollar Tree, bid-ask spreads are relatively wide. I would just trade it after its report. Come find me at Weenie Trades Live. Other than that, though, I wouldn't be surprised to see Dollar Tree, come back into 97. Maybe it comes to the top side of support, 108 on Dollar Tree. If we look at the weekly time frame, Dollar Tree has been performing fairly well, except for the past like 3 or 4 weeks. If we look at the monthly time frame, yeah, it'd be completely natural to backtest the former breakout area and maybe find a little bit of stability. Depends on if that stability lasts. So again, bear market, flip your mindset from buying the dips into, hey, it's bouncing, let's short the rip and stop out. And if I stop out, that means, oh, hey, the trend is likely to potentially change. So that's all I have for today's video. Be sure to check out all the different futures videos that I've been putting out. I've been posting my futures trading. It's definitely pretty interesting. I'm having a lot of fun doing this Apex Trader Challenge. You can go onto the community tab on Weenie Trades LLC. You can see how I did today. You can see how I did the day before. You can see how I did on Sunday futures, minus $12, plus 301. Today was plus 165, but a little bit of commissions. So definitely interesting to see. Go check out the first day. The first day was plus 260. So maybe I do have an edge trading futures, and I just needed a better platform, because this platform, NinjaTrader, definitely pretty cool compared to Thinkorswim. Comment below what you're watching or what you're in.
Thanks for tuning in.
I don't know, because it's funny.